Do you want to buy properties in Singapore, Malaysia, Hong Kong, Australia, Japan? All these are Asia Pacific countries. But sitting in India, there is an opportunity. I'm just going to talk about Mahindra Manulife Asia Pacific REIT FOF Fund of Fund today. So, hi, hello, this is Ganesh Santru, your stock market profit coach, and author of the book One Page Mutual Fund Plan. I help in investing your money. And today's topic is, can you invest in REIT, and that too sitting in India, investing in Asia Pacific region, that too in Singapore, Malaysia, Hong Kong, all are hot cities as we all know. So can you invest in those properties, and a small amount, whatever you have, you can invest and make sure you are earning much out of it, right? So this is what I'm just going to explain. So if you are interested in real estate, and that too the stable income, you say you are putting your money in a residential real estate in India, what you're going to get is just 4%. But if you invest in a residential commercial real estate, and that too you need a lots and lots, crores and crores of money. But whereas with as a model of SIP or a lump sum investment of as small as possible, can you invest in this model in a commercial property? That is what you're going to see. Mahindra Manulife, a mutual fund company, has brought up with a new REIT. It's a very nascent, very starting stage, I will say. In India, REIT is very, very slow, or the properties are very, very less. But across Asia Pacific, it's a hot properties. All these Asia, Singapore, Hong Kong, Australia, or Malaysia or Japan, there are enough properties, and we are going to invest in that company. Okay, that is the advantage of investing in this one. Let me, without any further delay, let me show you about the details of this company, so that you know you are going to invest in something good. Okay, be a part of Asia Pacific REIT's growth, which means real estate investment trust growth. And if you look at the investment period, it's from 28th September to 12th October 2021. And these are the popular asset class: debt, real estate, and equity. As we all know, debt, these are the things. And low interest rate, that is what deteriorating. The people are moving away from debt, right? Because you cannot have much more money in the same asset class where it is less than the inflation, right? And whereas real estate, residential properties, commercial properties are highly illiquid, meaning you need a huge sum of money to invest, and what you're going to get is you cannot liquidate easily. Whereas equity, the returns are volatile. Last 1 year it has been so good, but the next 1 year we don't know how much it will be, right? So in this kind of scenario, introducing REIT, this Mahindra Manulife is introducing real estate investment. This is a major difference between the real estate and when you invest in this company, real estate investment trust. Because rental yield will be maybe low, that is what we had seen, but here they must distribute most of its cash flows as dividend. So whatever they are generating as cash flow, they will invest in malls, they will invest in high rental properties that needs to be redistributed. And these, because of COVID is coming up, this will be getting filled up, and that is the advantage of investing in this one. And you need negotiations, all these things are there, and these are all listed mostly and can be liquidated faster at any point of time. If a company, if the mutual fund company wants to exit, it can be done. And large ticket size, as I said, residential or commercial, the ticket size is 50 lakhs to 1 crore or higher, whereas here as small as possible. As it is a fund of fund, you can invest 5,000 rupees to 10,000 rupees, and that will work. And diversification is costly and needs extensive research, whereas here you can invest in malls and commercial properties, other warehouses, and data centers, which is coming up. Like Google is building up so many data centers. Every company which is into the IT technology domain, they are building huge data centers. If that is the case, just look at it, is going to grow up like anything. And the companies which are investing, which are building up all these things, they will be investing in that also. And risk is adjusted due to monitored and diverse exposure, because it's not only one real estate company or one property, it's across so many other properties. That is advantage. And these are all traded on major stock exchange. Real estate investment trusts are companies that own or finance income producing real estate across a range of property, as I said, such as residential, industrial, retail, mortgage, hotels, etc. It is managed by a board of directors or trustees, which means it is properly managed. There is a team which is going to do that, and you are going to invest in that. And the stockholders of REIT, if you are investing, you are a stockholder. You earn a share of income produced through real estate investment, without actually having to own. You don't need to own, but the rental income will come to you because you invested in that property through this REIT fund of fund. Because right, that is how income generated on the lease and rent is paid out in the form of dividend. Is it clear now? Because You are investing something, and and that money is invested to own up the property, either lease or rentals, and those rentals will come back to you. REITs must distribute most of its cash flow, because that is one of the fundamental points of REIT, and that is why you say you get returns consistently every. I think it's not every month. There is a dividend option where you will get every month, and if you're choosing growth option, it will get whenever you are selling, because the growth will come back to the fund, right? That's how the growth and dividend works. An international REIT is a great way to diversify your portfolio, because it's international, it's in many countries, and this is Asia Pacific. So many countries are put together, and they build exposure to real estate markets worldwide, right? And real estate, when there is a time period, it will grow up like anything. So if you stay invested, the properties are going to be huge, right? So that is the advantage of and owning up commercial properties across the world, and specifically in Asia Pacific region. That is the advantage of investing in this particular fund of fund. If you look at this equity or bonds cash, they don't generate cash regularly, but whereas this real estate investment trust generates based on the same economic or market stimulants. So this is something like a unique product which is slowly coming up, and this is there are so many funds which is for fund of fund is coming up, which is investing in equity market. Recently we had HDFC which launched a world index fund, which they invest in Credit Suisse fund, where they invest in five different index funds across the world, right? And Kotak and Axis has launched global innovation fund, investing in all the countries, top countries, developed countries. And this is something like Asia Pacific REIT Real Estate Investment Trust. They invest purely in real estate investment properties, and almost 70 to 80, 60 to 70% will be in. This is how the REITs work. You are going to invest in real estate investment trust, which will be having manager, sponsor, and trustee. And in this case, REIT is managed by Mahindra Manulife. That is the mutual fund company, and they invest in commercial, industrial, and residential properties. And that is diversified property portfolio, local REIT manager advantage. If it's in Hong Kong, there will be a person fund manager, and they will earn the returns from the rentals, and price appreciation will be brought back to the fund, and that will be passed on to the end investor. In this case, you are the end investor. So that's how this is going to work. Globally, just look at the range. In USA, it's 5.4%. In Singapore, it's 20.3%. And in Hong Kong, 7.3%. In India, it is just 0.7%. And that too in the commercial reality, road, power, transmission, and telecom. But if you look at the sectoral presence in all across the world, there is so much. Passive fiber network, power utility, residential broadband, telecom service, and infrastructure. All the infrastructure related things are coming up. That is what its real estate investment trust is all about, right? So diversified across retail, office, data center, hotels, and healthcare. And we all know all these are hot properties, and all these retail, office, everything is included in Singapore, Malaysia. And based on the economic condition, it will come down or go up. And these are the diversified properties. If you go to the Mahindra Manulife website, they are given the all the documents related to it. And Australia is $117 billion market, Singapore is $82 billion market, and India is not yet included. It is also part of Asia Pacific, but still it's very nascent stage. Hopefully it will develop in the future. But as of now, this is what the entire industry is all about, right? Presenting this is the fund of fund master, and what they are going to do, the parent, this is a parent scheme. You are going to invest in Mahindra Manulife Asia Pacific RET fund of fund. This money will be invested in RET fund. This is the master scheme, right? This is how it works. Asia Pacific RET is listed, and this invest in the properties across Asia Pacific countries, and annualized yield is 4.81%, right? So that will get added up. So you'll be getting around, along with the appreciation, maybe around 8 to 9%, maybe on the higher side. That is what we can look at. Only when the market is listed, right, you will be able to see how much returns they are going to make. Till the time we don't know how much returns this fund is going to generate, right? Inflation hedge, so the inflation in India is around 6% or 7%, and right now it's around 5 to 6%, right? So if that is the case, you may be getting around 7 to 8, in between that range. That is what you can expect. And all these are related to the funds and everything. And if you look at, this is the returns they gave in the last since 2010. If you look at, it's between 5.8 to 4.4. It means you will be getting anywhere around 5 to 7%. It's a conservative returns. So if you want to get diversified into real estate investment trust, maybe you can invest in this, right? Exceeded inflation. The point is inflation is around 5 to 6%, and this fund is going to give you around 6 to 7, because 20% or 30% will be invested in companies which are building these companies. Okay, so so capital appreciation will come from that 0 to 30%. Right now, the 20% allocation is for companies, or companies which are managing or in doing this non-REITs, real estate and property management stocks. So that will bring in appreciation. So anywhere around 7 to 8%. So instead of debt fund, you can have this fund in your portfolio, and just look at the fund appreciation since 2018. It is closely managing around 600 million US dollars. So the fund size has increased. So it shows this is a current sectoral breakdown. From 2018, the fund size is close to $600 million, and investment manager is Manulife Investment Management Limited, Hong Kong. Right, REIT is around 80%, non-REIT is something, and cash is also there. So they are diversified. Geographic location, if you look at, close to 58% is in Singapore, 14% in Hong Kong, China, Australia, Philippines. Australia's market is huge, but the investment is very, very less. Going forward, if condition improves, automatic. Just look at Australia is still, I think, not completely out of pandemic. Based on that, they reduce the things. So based on the current economic condition and everything, they are increasing or decreasing. This is what the top holding summary, top 10 holding summary of Mahindra Manulife Real Estate Investment Trust. Just look at industrial, retail, industrial, diversified, retail, diversified, industrial, retail. The industrial, in the sense, they may be investing in warehouses or manufacturing companies, or where they will take it on rent and they will get rental yield. So this is how the market exposure is all about, right? The rupee volatility between the US dollar and INR, that will also come in. So I think we can expect anywhere around 8 to 9%, looking at every time we are increasing, because just look at the last 10 years rupee appreciation is 4.78% CAGR. So adding with the rental yield properties, adding along with the appreciation from the stocks, real estate, non-real estate investment trust companies, automatically you should be getting around 9 to 10%. I'm just keep on increasing, just looking at the data. So this is how you will calculate. So if you want to diversify, that is the only reason you might invest in this company. There, and you don't need the problem of, like, there is a because of COVID, I don't have money, and all these rental landlord issues may not come, because these are listed and the agreement is in place. So everything is taken care. And outlook summary, like, just the plus, it will increase, it will come down, all these are mentioned here, right? If you look at Hong Kong, focus on decentralized grade A office given rent differentials. So all these are taken care, it will be done. So just look at the other things. Just go log into the Mahindra Manulife website. And who can invest in this fund? Just give me a minute, I'm just coming back. Who can invest in this fund? This is suitable for people who wants to diversify and into real estate and get around 9 to 10%. For them, this is a good option, right? So if you are looking out for real estate investment trust, this is one fund you can look at investing right now. Thank you so much for watching. Please share this with your friend who wants to buy properties in Asia Pacific region, Hong Kong, Singapore, Malaysia, China, and Japan. Thank you so much. See you in the next video. Thank you.